Qualcomm announced third quarter 2024 results, July 31st. Revenue beat LSEG's forecast of $9.2 billion. Their handset business helped push better than expected results, as well as their fourth quarter guidance was more robust than anticipated. The market was happy with the shares up more than 9%. Qualcomm's third quarter revenue was just shy of $9.4 billion, unchanged quarterly, but up 11% year over year. Gross margins are hovering around 55.6%. Operating profit was $2.2 billion, down 5% quarter over quarter, but up nearly 22% year over year. Operating margin is 23.7%. Net income for Qualcomm was $2.1 billion, down 8.5% from last quarter, but up 18% year over year, giving us a net income margin of 22.7%. Qualcomm's quarterly revenue from Q3 2022 shows that revenue has been struggling, down 168 basis points. Gross profit is also lower by 175 basis points. Operating profit by 7.5% and net income down 6%. Let's look at Qualcomm's revenue by business unit. Qualcomm has two distinct business segments called Qualcomm CDMA Technologies, or QCT, and Qualcomm Technology Licensing, or QTL. Within QCT are handsets, automotive, and Internet of Things. Handsets in blue is Qualcomm's primary revenue generator. This segment earned $5.9 billion, or 63% of revenue. It was up more than 12% year over year, and this is what got the analysts excited about Qualcomm's results. Growth here seems to indicate that the smartphone market softness has passed. Quarter over quarter, this segment was down 4.5%, in the last 9 quarters is down nearly 2%. The Internet of Things in yellow generated $1.4 billion, or 14.5% of revenue. This was up 9% quarter over quarter, but down 8.5% year over year, and is down by almost 4% since Q3 2022. Automotive in red produced a surprising $811 million, growing 34% from last quarter and 87% from last year, up 8.6% overall. Qualcomm Technology Licensing, or QTL in green, earned almost $1.3 billion, or 13.6% of revenue, down 3.4% quarterly, but up 3.5% year over year, and down 194 basis points in the last 9 quarters. Let's look at the earnings before taxes for QCT and QTL. QCT in blue earned almost $2.2 billion, down 4.7% from Q2, but up 25% from last year, though 9-quarter growth has been down by 3.5%. QTL generated $894 million, down quarterly, but up 10% year over year, and it too has been contracting by 2% overall. Let's look at Qualcomm's fundamental valuations. Shares outstanding grew by 4 million. Earnings per share was $1.88, down 8.8% quarter over quarter, but 17% year over year. Qualcomm's current PE is 21.7. The S&P 500 has a PE of 28.5. Qualcomm has a PEG ratio of 0.75, which is interesting. Sales per share were almost $33, giving us a price to sales of 5 times. Book value per share was $21.75, better by 18% year over year. This is a price to book value of 7.7 times. Cash per share is $6.85, and cash plus marketable securities is $11.49, giving us a price to cash ratio somewhere between 24 and 14. Leverage ratios have the debt ratio at 0.28 and debt to equity at 0.6. Interest coverage is 13 times. The liquidity ratios show the current ratio at 2.4, the quick ratio at 1.6, and cash at 0.8. Qualcomm's return on assets were 16.5% and return on equity 35%. Return on capital employed was 21%, and so was return on invested capital. The effective tax rate of Qualcomm is 7.9%, giving us a NOPAT of $8.2 billion with average debt and equity of almost $39 billion. Cash flow numbers look good. Operating cash flow was $9.6 billion, up 33% year over year. Investing outflows were $3.2 billion. Financing outflows $7 billion, with free cash flow to firm of almost $9 billion. Qualcomm trades at a 21.6 multiple to free cash flow. Qualcomm's dividend is 84 cents, which is a 2% yield, growing at 5.3%. This is a payout ratio of 45%. The enterprise value of Qualcomm is $195 billion. This is a 5.2 multiple of revenue, 16.4 multiple of EBITDA, 22 multiple of EBIT, and a 22 multiple to free cash flow. Looking to the guidance, they guided slightly higher from their last update, with revenue expected of $9.5 to $10.3 billion and earnings per share between $2.38 and $2.58, which gives us a forward PE of 19. Key takeaways from the report were the revenue growth, particularly in handsets, the principal business of Qualcomm. Guidance was also improved. Cash flow numbers look good. The PE and PEG ratio suggests Qualcomm is undervalued. On the con side, the Internet of Things revenue continues to struggle as the metaverse fails to materialize. QTL revenue is struggling to grow. That being said, we're giving Qualcomm a buy rating. We have no exposure to this company. Like and subscribe.